The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tommy O'Brien, and Darrell Martin.
Welcome, folks. Tommy O'Brien, Darrell Martin, Tom O'Brien. We appreciate you growling and prowling with us out here. Right now, you got the Dow Industrials down 235.
That's quite a growl.
Oh, man, I'm telling you, man. Dow's down 220. You got the Nasdaq off 69. S&Ps are off 29. Gold's up 26. Silver's up 54. You got oil down 37. Bonds to the moon, baby. You got the 10-year up full point. The 30-year is up almost 3 points right now. And King Dollar is getting sliced and diced down 961. If you haven't test drove the Nadex platform, folks, it's a great time to do it. Come over to our website at TFNN. You get it on the top, on the side. You hit the platform. You can put $25,000 of paper money into your account. You can see how these contracts trade. And in a volatile market like this, man, I'm telling you, it's as good as you can get. You know,
well, you can learn so much, like we talked about, with the premiums and how they adjust, and the volatility and everything, and how they, a volatile market, you're going to see those premiums adjust, and that's how you understand how they move.
Exactly. And Darrell Martin, what's going on, brother?
Hey, man, just enjoying the volatility.
Oh, man, and folks, if if you're not in front of a screen, I'm sure that 99.9% of us are not in front of screens all day. When the jobs number came out this morning, you had the NQs move basically 100 points and 90 points, and the S&Ps moved like 30 points.
Yeah.
So it was about as intense as you can get.
And it's a Friday, too, which is always entertaining.
It's heavy,
the mentality of how that plays in.
It is.
Because you have to kind of trade for one day to anticipate what's going to happen almost for like 3 days.
You do, which is really cool, though. You know what I mean? That's a great way to think about it, because you have to think about it that way, because you have to, I was just saying, Darrell, I was just saying to Tommy that it's not that it's unusual, but at the end of the month, folks, okay, hedge fund numbers come out. Well, two of the large hedge funds out here have lost a lot of money. And in fact, they lost as much money as they did in the first months of 2008. Now, these are two of the largest hedge funds out there.
Ouch.
Yeah, and that's a huge problem. And the reason it's a problem is it's not a problem. None of us ever want to lose money. But where the problem comes in, folks, is that as that happens, trading hedge funds, most of them you can get your money out almost every quarter. Okay, so when you got your numbers, there's redemptions that are going on right now, and what that means forced selling. That's a different ball game. Sure. And it is surprising actually when I saw those numbers, because this is not 2007, but the velocity of the move in August was faster than 2007. That first move.
A lot of people got hurt there.
A lot of people got hurt.
Some losing trades for sure.
And leverage.
A lot of people made a lot of money too around that time, but.
No,
there's extremes on both sides, I'm sure.
Yeah, exactly. So you want to keep that in mind too. I mean, the bottom line is that that's interesting. The Dow we're only down 211 right now, but the S&Ps, the Nasdaq still can't get any traction here.
But that's interesting. Think about it. So I wonder how, if the hedge funds, let's say, just because of the volatility, you're going to have more extremes in terms of big losers and big winners, because either side is either losing big or winning big on those moves. So, redemptions could accelerate, because as you're losing money, they want money out.
Yes.
But I bet that money doesn't, as quickly at least, and it eventually will, funnel. There won't be the acceleration on the upside. If somebody just made a killing in a month, they're not going to take in as much money probably as the funds are going to lose that got hurt so bad.
That's correct.
Right?
And
at least in this environment.
No, there's an absolute.
They can't get the money back in, and it'll be there, because that money's coming out of one fund. It's going to go into the profitable funds. It will.
It's absolutely huge.
But that's going to take some time for that money to find that.
Tommy, it's huge what you're saying. And the reason is that I know. Because I know. No, but you know why I know? You know why I know?
No, that's the reason.
Exactly.
That's the reason.
You like that, Darrell? You like that?
Darrell.
Darrell,
if you could.
This kid puts a baseball bat over my head on a continual basis.
That's the reason. But
No. This is my speculation.
Okay.
Because when I'm even shot the market, right? When I'm shot the market, when I know I was on the right side in 2007, 2008, and even when I'm on the right side now, I know a little amount of money that you actually make, right? Do you know what I mean?
Yeah.
And it's great money, okay? But it's nothing compared to what's lost, and it's terrible.
No,
and
for
so
sure,
you're
for
absolutely
sure.
right. And because I think that's true.
Right.
I'm saying to myself, man, and that's the fact, folks, because everyone's long, so
Yeah, no.
So there's, anyway, it's
They are,
it's a
for sure.
fact.
They're
It's a
long.
fact, man,
Well, one thing that's interesting too is we're always talking about how far it moves down.
Yeah.
And if it was planned out or not, and if it was expected or not.
Yeah.
Nasdaq 4119 is one implied deviation.
Pretty
move.
cool.
41.19. I like it. Well,
Or at 41.20, just so right now.
that's right. Well, let me ask you, what is 40.40? NQ, because my take on this is going to get interesting, is that 40.40 is a number that we can actually get into
I
today.
have to laugh at that, too. 40.40, that's your number, but go ahead.
I know.
That would be over a 3 deviation move, causing over a 4 deviation move to get all the way back up there. So you're talking like a 0.1% chance.
No, say that again.
40.40.
Oh, I was thinking 4,400.
Yeah.
Sorry.
40.40.
Like, you're really shooting for the moon.
No, I
Okay,
know.
sorry.
I was like, that one's not a 0.1. You heard it, yeah.
Oh, yeah, no. It's
I was like,
Yeah.
I was
What do
really
you,
going
what do you
for
think
more
about a
today.
10% move today, Darrell?
I was like, wow, what do you know?
Yeah.
Because you know.
10%.
I know.
I better get paid on that one.
The 40-40, that would be...
So like 2.5?
yeah,
standard
a
deviation?
little below 2 deviations. So about another deviation.
Yeah.
deviation
Well, that's
and a
good
half.
if you're around the
40-50 is 2 D. 2
Okay.
devs.
And what's the statistical, what's the probability of a 2 standard deviation move?
It's like 97%. It's basically a 3% chance.
3%. Okay, but that's,
yeah.
I mean, that's, yeah.
Okay.
Yeah.
You're
And it does happen, though.
Right. I mean, when you put it, that's 1 out of
I think-
33 days. I mean, that's
Yeah.
almost once a month, once every 2 months. That's
Yeah, it's actually
you
pretty
just want to relate it to,
accurate. Yeah, to make it
Yeah.
a little more,
so you can understand it exactly.
relate it to
You say it's a
reality,
3%, and somebody says, that's never going to hit. But then when you go, maybe that'll.
I'd say about every month on, most markets we see at least,
Yeah. And
So-
I wonder how that's played out though over the last 45 days. Maybe I'm sure that we've exceeded the standard deviations. Maybe. Over the,
probably about
we've
3
been
or 4 times.
Yeah.
So, because I mean, I understand they do. It's not a standard deviation would exceed a lot. Implied deviation, we
right.
don't.
No, I understand because it's
Because they
anticipating
expand
what.
automatically.
Right.
Yeah, with the option pricing.
Yeah.
And the the S&Ps right now, so this is a good little bounce. So we've been out of 1883. You get 1892 right now, and let's see, we'll go over the NQs because if we could get a little bounce going, then you can sell the heck out of that bounce. We're at 34.
It's so early. It's interesting
It is.
that when
It
It's
is.
really quieted down here for the last hour.
It has. It was just, and that's
Yeah.
why it's like, oh, maybe, but it's still so early.
No, it is because we hit 41.11. Right now you're at 36, 37. That means this thing is going to get a real bounce in maybe 41,
Oh, it's bouncing right now.
49. Oh, that was quick. Yeah, right.
Yeah, we got thick volume coming in.
Yeah, but you're going to go right.
See if we can bust through 41, 47 right there.
Yeah, you're going right into that baby.
I mean,
so
it's pretty amazing when it's a 30-point bounce.
I know.
It's like 0.7% on the index, and it's almost just like getting dismissed.
Yeah,
Not re- that's how big the moves are. I'm just
It is.
it should be, but it's just amazing when I look at the moves on the indexes on a daily basis. It's just amazing. I mean, we just had a bounce that's like at least over 0.5% on the index.
Exactly. And if we take a look at this,
And that's just chop.
Right, exactly.
Yeah.
That's my point. That we're just like looking right past it almost, and then the charts look right past it. It looks like nothing on the charts.
I
And
know,
that's
man.
Today
Yeah.
especially, but it's just amazing that you don't have half percentage moves, and that's what's great about if you're trading spreads or something like that, getting the full moves. There is just volatility, especially when you're dealing with spreads or binary options, because they're a risk reward play
They are.
investment. It's
well, you know what I saw yesterday, Darrell, which I was really digging. I was trading the spreads, and the spreads were almost trading like the binaries, which was meaning that I was buying them at 20 cents on the dollar. Okay, and they were out of the money. Then they were out of the money by about 10 points. I'm talking the NQs now, right? But 10 points out of the money in the NQs were nothing. You know what I mean?
Yeah.
And so what happened, on one spread, it was only a 30-point spread, I traded it 3 times within 20 minutes. Nice. And, you know, and now I didn't get the full amount, but let's say I was putting up 200, I was getting 300 every time. Yeah. You know? Yeah. It was like, man, this is pretty sick. Yeah. And my point is, folks, is that all of those times, it actually only went in the money like 1 or 2 points. But because the VIG was so bad, you know what I mean? It was going
still premium, like we always talk about. That premium's going nowhere if you're trading quick.
It was still premium, you know, which is pretty cool.
Yeah, right now they are loaded with premium.
Oh, they have to be. Right. Yeah.
I just look at it when you say, would you be on the other side? That's why that makes you understand premium real quick. Because would you be on the other side of that? Well, you better pay up for that right.
You're not kidding, man. You know, and that's what I was thinking. The third time that I went in, I said, these market makers, who's ever on the other side is going to be driving them crazy, man, because I'm sure they've still made plenty of money.
I'm sure.
But
they got to love the volatility, too, because volatility is trading, and if you're making a market in a volatile market, you're doing fine.
It's huge. It's huge.
Especially whenever you can pump it with premium in the process.
Yeah, so, you're making the market in a volatile, active market. That's for sure.
So one of the things to remind people of is the pricing is not like weird or odd or whatever on Nadex. Like, well, maybe the market maker is hosing me. If you go over and you look at the S&P E-mini options,
yes,
you're going to see the same pricing.
Yeah, you brought that up. I know. Isn't that cool? Right.
And so, I mean, it's just a Black-Scholes model. It's nothing. You know, so I may bring something up. We may actually compare a spread with that.
No, that'd be awesome.
That'd be great.
That's cool.
You stay right there, folks. Tommy O'Brien, Darrell Martin, Tom O'Brien. We appreciate you growling and prowling with us out here. Right now, the Dow is down $1.95. Nasdaq's up 54. S&Ps are down 26. We're going to be right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow Industrials are down 184, Nasdaq's off 48, S&Ps are off 25. And folks, if you do happen to be in Las Vegas, the 14th and the 16th of October, come visit us.
We're all going to be there.
We're all going to be there, growling and prowling.
It'll be good times.
At the craps tables.
Strictly business.
Yeah.
Risk reward, always, right?
But
even at the craps table.
You gotta stay sharp on your probabilities.
You gotta stay sharp on your probabilities in Vegas.
But guess what, folks? We're not playing with Darrell because Darrell at the craps table.
Hey, Darrell's playing odds.
Yeah, yeah.
Hey, just because I'm walking away with all the chips, it ain't my fault.
Hey, he's a.
We're all playing a negative sum game when we walk into those. So.
He's a don't pass player, folks.
Hey, they're all house advantages. So
figure out what the average person does, do the opposite. It usually, results in a profit.
Oh my God!
In a casino, that's probably the smartest thing you can think.
I'm gonna bring your daughter's lasso with me so I can tie you up and not get my table.
I'll buy you a drink or a dinner afterwards.
Oh, thanks. Oh man. Okay, so let's talk about what you were just talking about. That the premiums inside the option of the S&Ps. That'll be pretty cool, man.
Right. You can go in and you can compare them, and most of the time they're going to be, pretty much in line.
Yep.
So if I go over here, let me just open up Thinkorswim, and I go to S&P options that expire today.
Yes.
Okay. And then we'll compare that with some spreads that expire today at 4:15. Okay. So same time. And then we need to find the same expiration. So here's one with and same floor, same ceiling. So I got, Thinkorswim up here.
Yeah.
It makes it, the easiest option platform ever. And so we can go over here, and so if I'm going to buy this 1880 to 1960 spread that expires at 4:15 today on the S&P 500 on Nadex. Okay. Then I'm going to go over and I'm going to look at an 1880 call. All right?
Yeah.
And when you buy a call option on futures, it's a little bit different than your standard, stock options and all that.
Yes.
You're actually buying them in lots of 50 versus 100, like on a stock. When you buy a GLD option, or SPY option, you're buying 100 options per contract, right?
Yes.
On the S&P, you're going to buy 50. And they have weekly contracts on the S&P.
Right.
So if I go over here and I compare these two together,
this is pretty
I can
cool.
look and see what the risk is.
Okay.
And so, just to make sure we're getting, live pricing here and just trying to update it.
Yeah.
We're looking at, people always wonder, is the Nadex market maker hosing me? I hear that question all the time, right?
Okay.
Well, right now to buy on CME, $775, okay?
Yeah.
Is going to be how much money I have to put up to buy one ES option.
Okay.
Which is 50 of them.
Yeah.
To equalize that, I got to buy 5 Nadex options.
Right.
Okay. Basically,
Yeah.
make it $50 a point.
Right.
Like the S&P is. So right now, I can do that for $705. There is a $70 discount on premium right now on Nadex.
Wow. That's pretty cool. Now, is this a daily or a
Now,
weekly?
the discount and the premium, though, is that because your profit's capped at that 80 points?
Oh, it won't matter. No.
Okay.
It doesn't matter at all.
It doesn't matter at all.
So sometimes they're the same, sometimes it's a little bit higher, sometimes it's a little bit lower.
Okay.
Because you have an unlimited profit potential on the futures contract.
You have a theoretical little profit.
Theoretical, right?
Yeah.
That
Yeah.
might explain some of the premium. I mean, it should.
It really shouldn't impact it when the market's that low already.
Okay, I'm with you.
Because we're only 8 points above the floor.
Yeah. Very
So
seldom are
basically,
you going to read
you'll start
profits.
seeing premium on the other side when you pass the middle,
Okay.
and it'll get larger. Sort of like premium gets higher as you get to a strike when you're at the money on a strike. Right?
Yes.
That's your highest point. So your two highest points on premium are going to be at the floor and at the ceiling on a spread. In the middle is going to be like a delta of 1. Like there'll be like no premium.
Sure.
Okay. So that premium will grow larger if you go either way. So since we're about 8 points up, we're all premium on the from the floor side right now. There's no premium on the ceiling side that would impact the pricing.
That's really nice understanding them, though.
Yeah.
Yeah.
Yeah, so it lets you just what I like about it, lets you just see apples to apples comparison.
Right.
Is it are they priced well?
Yeah.
And they used it, and I tell you right now, I know because I've dissected them every possible way.
Yes.
And they're using the same premium model on the binaries because binaries are basically here's the binary pricing model. If you know a little bit about options, okay?
Yeah.
They're the delta of a call option. I know y'all know a lot about options, but just for our listeners. The delta of a call option is a binary's price.
Okay.
And so that's all it is. I mean, you're literally you're trading delta when you trade a binary, okay?
How cool is that?
But that shows you how good the premium is actually over on Nadex. Every once in a while, you may be able to take advantage of that if it's
Yeah,
not too
that's
wide.
really
You
cool.
got bid offer spread, you got to take care of and all that. But it's nice.
Have
It's
to
well
love
done.
it. You stay right
Yep.
there, folks. We're all coming back. Dow Industrials right now, bingo. Dow's down 204, Nasdaq's off 53, S&P's are down 27. Gold's running, folks, up $25. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Tommy O'Brien, Darrell Martin, Tom O'Brien. We do appreciate you growling and prowling with us out here. If you haven't test drove that Nadex platform, folks, great time to do it. We're talking about these contracts right now. And, of course, don't forget, Darrell has a great show every Wednesday, Thursday, noon. We do this show on Friday morning, 10 o'clock. Now, as you bring up the exchange, folks, okay, they'll put $25,000 of paper money. You can see how these contracts trade. Darrell is a great scanner. And the scanner, folks, will give you the best contracts to trade for the strategy that you want. Okay, it's not going to tell you whether to go long or short. What it is going to do, though, is give you a risk-reward parameter inside of that. What it is also going to do is, as it's done just here this morning, give you those deviation levels, which are absolutely crucial. Looking at
everything's risk reward, and that helps you understand. You know, you got to make the decisions, but like Dow, you got to understand what your options are to make those decisions.
No,
right?
Totally. And what's so cool is that, like this morning, okay, when that coming down to a deviation, you know, if you are an intraday trader, well, that's great because
it bounced right off it, right?
It bounced off it, and you can keep trading it back and forth because it's 20 points to bounce every time. That's 20 points is insane.
I think the only thing, I was reading Andy Heck's newsletter yesterday, and everybody says, you know, whatever they think about the markets, and I'm always reading everyone's newsletter, but what everybody's saying right now is you have to be quick. With your trades, like no matter what in this environment, it's just like take your profits, you know, cut your losses. Right. When something's, keep your eye on it, you know, and get out of it. And
exactly, man. Blink, and you know you're going to be up and down.
How can you go wrong when the market's moving? Like with that, you know, when it's moving 2-3% a day.
Whether a bull or a bear.
That's right.
You know, I mean, well,
you're covered at least where you're not exposed to dramatic losses, and eventually, just by the law of averages, even if you're going to make some big profits if you let your profits run.
And it's surprising, folks. Okay, how fast intraday just $300 or $400 goes up. You know, 10 times is 3,000.
Like we talked about, full. I mean, you're getting full movements of the spreads.
It's very quick. Right.
The Nasdaq spread's an 800-point master spread. If you can get, I mean, and we're getting those 80-point Nasdaq 100 moves throughout the day. So
exactly. So I want to just go over to the IBB for a second because I got to keep an eye on this IBB because of trading the NDX here. So it's interesting. So the IBB is actually moving, folks. Okay, we'll see whether it can stay over this 305.14. So let me see what's moving inside of this thing. Because the IBB is the one indice itself, okay, that can actually move the NASDAQ. And actually, let me go over to WIN. WIN.
I was going to say, I want to know what's going on with WIN.
Yeah, so
you know what's going on?
WIN's up $7. Let's see. Macau casinos jump on stabilized revenue. Okay, the revenue's down, but it's getting stabilized. Okay, so let's see what they say. Casino operators rose after Macau monthly gaming revenue fell in line with forecasts, suggesting the gambling's 16-month slump is stabilizing. Yeah. Well,
China may move to support the city's economy further. That's all. That's what you want to hear too.
Yeah. Well, that's a fact.
Yeah. If I'm in the casino business and China says I'm going to make sure that business is good and the city is rocking,
right.
That's good for the casino
and what they have to do there,
that's
of course,
a party. You know, if the city's rocking, the casino's going to be rocking.
There's no doubt. and then that tunes in that okay, they're gonna not watch all the big money over there because that was one of the big deals too.
Okay.
That you make big money, you start, and that's when guys will start getting arrested.
Sure.
You know what I mean? It's like okay, hold it, where are you getting all this bread, man?
Sure.
You know what I mean? So let me see. So, in a market like this, I guess, if this thing calms down, would this be a time that you could grab premium on both sides?
Yeah, yes. But, I mean, you need to be directionally trading premium versus just neutral trading premium.
Okay.
That's where the big difference is going to come in. You're not just going to be, hey, I'm sitting here to collect some premium. Because, I mean, it can reverse 30 points, right, in a matter of 10 minutes.
No, in a heartbeat.
So it's not one of the... It's not your, like a lot of times you'll see me, just collecting premium on trades, and that's great, but you don't want to do it in such a way where you're just blindly going, I'm just going to collect time decay, because right now it's not about time decay.
Yeah.
It's about volatility premium.
Right.
So just you need to be in and then out. And I'm using the premium to give myself an edge.
Okay.
So I'm selling like 5 points higher,
Yes.
or 10 points higher than the market.
Okay.
And it goes down. I may not make it as fast, but if it moves against me, I also have a little bit of wiggle room in there.
Right.
So I'm using the premium more for an edge than I am simply to make premium whenever I'm trading directionally in fast markets.
Nice. And so, so when you're doing that, you're probably risking a little bit more than your potential reward, right? But that's
on my max, yeah.
On your max, right? No, right. And you're being quick anyway. No, I'm just
No, but you're 100% right. Yeah, that's how it is.
Yeah, this is going to get interesting.
And that's almost what I was saying earlier. If you're quick on anything, that helps that same strategy where it's like you're collecting those 5 points of premium. So you're watching it, and you're not just going to let it.
No, you can't. You don't even go to the bathroom. It's not worth it. Seriously, man.
Priorities. That's right.
There's no doubt, man.
Fast market.
This is a fun little interesting thing right here for you. There is a volatility skew like crazy on the put side right now.
Okay.
Oh, look at this. Have some fun with that. If you buy a 1920 put, okay?
Yeah.
That would be like selling a spread with the 1920 ceiling. Make sense?
Yep.
Okay. And right now, the risk on buying a 1920 put would be 1525. The risk on selling a 1880 to 1920 would be 1240. That's a pretty massive difference.
Now that's your profit potential is only 1880 on that though, right? And that's
right. The profit potential is smaller, so we are getting on that middle side, or that premium's on the other side.
Yeah.
But you could go in and go. I mean, I'm just throwing out some. This is some
that's cool to
advanced
understand.
concepts.
That's what
Bull bear binary hour, right? So if we go in there and look at this trade, this is sort of the the weird stuff I like to look at. I'll go in and I'll see that, and I'm like, okay, wait a minute. That means I have $300 in premium, like locked in.
Yeah.
Okay. Down to, and this is important, down to 1880.
Right.
Okay. Because at that point, one's not making money, that type of thing. Because if I go to buy one, sell the other, stuff, that's what I start looking at, stuff like that, where I can find those kind of skews. And you can go in and go, okay, that's quite a bit of premium that's locked in on one side. I'm actually, one side I'm paying more, one side I'm paying less. And so this thing could actually hedge me. And this is where you actually look at the trade, is you go, what if I bought it instead of sold it?
Right.
Okay. So I'm selling, over here, and the way the pricing works, I think the easiest way I can explain it is take the strike and subtract the cost, and that's like a Nadex price. Okay. So Nadex is Thinkorswim is at 1920. This is how Nadex displays the price, and that's why it feels so confusing to option traders to begin with. They don't understand this one thing. If they're displaying at 1920, okay, and they put the price at 1897 or whatever, and let's say it would cost $28 to buy that put, okay, they're subtracting $28, and they're going to say we're selling at 1892. Does that make sense? They took the cost of the option,
Yes.
subtract it from the ceiling,
Okay.
and that's the price Nadex is displaying, $18.92.
Because that's
Okay.
almost essentially what it is, right?
Yes, exactly what it is. If you just took the risk over here, and since basically you can't divide it small enough, but they're basically Nadex is displaying the risk plus the floor or ceiling. Okay.
Yeah.
All right. Whereas CME or CBOE or whatever is just displaying the risk, just looking at a long put or call. So that's the difference it's just a price display difference. It's not that it's completely different. It's just a price display difference. So what that lets me see by going and going, okay, I'm going to subtract that price from that strike, is that I can go in, I can buy CME at $18.92, I can sell Nadex at $18.97.2.
How cool is that? Yeah, interesting. Right.
So you can start playing with those, and you start seeing that little difference. Now there's a floor and ceiling on one or the other. So the nice thing is if you're buying on CME, you have no cap. Or your risk is capped. I mean, if you're buying a call or buying a put, right? Does that make sense?
Yeah.
If I bought a
it's
put,
an option. You're
I can only
capped.
lose $25.50. Okay, that's like my worst case scenario here times 50 in this case, right? So if I know that's my max risk on the trade, and I go to the other side, and let's say since I bought the put, I buy the call, I buy the spread. If I can buy it cheaper, and that's an if, I can buy it cheaper. Then there could be a little bit of an arb in there, or at least enough that I might be able to use that money to hedge off with a binary contract.
And that's some sophisticated strategy, but it's good to understand because and that's why I say pulling up the demo. I mean, there's a million things you can do in terms of how deep you go using those arbitrage in different markets with those premium differences.
Right. And some of them are pure arb, and I mean, it's not like it's just arb there all the time, so it's not like I'm going to waste some massive secret. It's just...
And it's something, even if you're not going to trade them, understanding that as you're making other trades. We're always just talking about the NASDAQ, but there's so many...
Is this premium expensive or cheap relative to other exchanges?
That's going to help you make those decisions about, what you want to do with your investment.
And understand, yes.
Right.
No, I like the...
because that's so sophisticated. That would be really tough for me to break down myself right now, but understanding just, how that parity is working. Right. That's going to help me no matter what.
Make decisions.
From this point forward.
Yeah. No, there's no
Even if you're not combining them all together.
That's what I'm saying. That would be tough for me. I need some more time with you, Darrell, to go through. No, but I understand the premise of it, and I walked through it, and I followed it completely, and so understanding that's a good deal.
It's huge.
Yeah.
It's huge.
The way I discovered it was just, I looked at it and I'm like, okay, well, CME price is just in risk, Nadex price is in strike plus risk.
Yes.
Or strike minus risk if they're using the ceiling. So, and that's why it looks so different. Like if I could go on and change all the way the displays of the pricing of the spreads, I guess I could, as to be like how CME displays them, then you can compare them side by side in pricing. Right?
That's so cool, man. Yeah.
And when you get that, then you can go, is it expensive or cheap? Because I mean, obviously a market maker is setting implied volatility. So, and then there'll be market participants impact that, but a lot of that is, market maker based. And so you can go, is this high or low? And, now the one drawback on this entire thing is as far as looking at this on spreads,
yes,
you can only see it on after Thursday at 6 o'clock for the Friday expiration, because that's the only, they don't have weekly
same
spreads.
expirations. Yeah.
Right. So basically only that one day expiration is
a perfect
Thursday
day to do the show then, every Friday.
That's good. Yeah, right.
Yeah. But sometimes, and I mean, it's not that I always see that Nadex is cheaper. Sometimes it's $30 more. Sometimes it's $70 less. That's on like 5 contracts. And some people get all excited and they'll think they found the Holy Grail all of a sudden. I'm like, well, don't forget, bid offer spread in there.
Yeah.
So it's not necessarily an arbitrage trade because I mean, 19 by 26 is what CME is quoting.
Yes.
Okay. Well, that's a 10, right now, or a $6 spread times 100 contract or times 50 contracts. That's a $300 bid offer spread.
Yeah.
Okay. Now look at Nadex's. Now this is another cool point. Nadex right now is quoting basically $4 wide. You do 5 of those, that's a $20 bid offer spread. Look at how tight the bid offer spread is. People go, the bid offers are so wide.
Are awesome on Nadex for the spreads. They are.
And people come in and they think that they're really wide because they're thinking like I'm trading euro dollar, or I'm trading S&P E-mini futures. You can't compare an underlying market to an option on bid offer spread. It's not the same thing. Like S&P is pretty much always going to be a quarter wide, right?
Yes.
But, if you go, I mean, we're looking at the options on it, and it's not a quarter wide. I mean, just for one, you're basically paying $300 in bid offer spread right now.
Yeah.
Man, that's a trip.
That's
so
like the
whereas
first
Nadex,
time-
you're paying 20 on Nadex for the
Right.
same size position. So not bad at all.
No, not even close, man.
Yeah, it's basically just 2 times the future market, $12.50, so a little less than 2 times. So like not even an extra tick in bid offer spread.
And that's why I really like trading the spreads. You can trade them so quickly and be in and out because the spreads are so tight. You just want to be aware, though, on the binaries, it's not quite as tight of a spread. And you can still, I mean,
That could go from $4 to, I've seen it go up to about 19 or 20. So
yeah.
But I love the spreads. Spreads have always been my
that's
favorite
really-
thing.
yeah, they're really
the
tight.
very first show we did, Tommy, right? I was like, spreads.
I know.
You know.
When you started talking about that NASDAQ and they had changed the tick to 0.1.
And what happens, folks, is that when you bring the platform up, you're going to go to the binaries first.
I did.
Everyone does. That's just how it goes.
That's a little bit easier to understand too, because you say, "I'm risking this."
That's right.
It's really tricky too. Not in a bad way, but I mean, it's so easy to understand, and because I mean, it's $100.
The simple premise,
this, that.
right.
But the reality is it's a statistical trade.
Right. And how they move.
Yeah, and I mean,
With
because
the
it's literally
market.
like probability of expiring in the money, and I mean, it's a very stat-based trading instrument, and people don't get that. They just see it's a very like, hey, it's 0 to 100. Anybody can do that.
Yes.
And anybody can shoot a gun too. It doesn't necessarily mean they should be. You need the right training on it. And so that's why I love that Nadex has demos, so you can get in there.
Yeah.
And but I mean, it's funny. I tell people all the time, they're like, "Oh, I want to trade binaries." I'm like, "Are you new to trading?" Yeah, trade spreads.
Yeah.
That seems so much more complex. I'm
Or
like,
stay
I
on the
guarantee it's so much
demo
easier.
for a little while.
Yeah.
And I went through. I mean, I was in there having fun. Like it was a fake video game casino. At least just to understand. What if I press on either side? What's the extremes? Because that was for
can you
me
get
to
both
understand
sides?
what was going on.
Fast they move.
And I lost, the money over and over because I just kept wanting to see how things were going and stuff like that. And they'll put money back in there, and and so it took me a month or 2 before I eventually put some money in there to trade for real.
There you go.
Yeah.
A lot cheaper to learn that way.
The Dow is only down $141. You get the Nasdaq down 26. S&Ps are off 18.5. Darrell, Tom, and myself are coming right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Tommy O'Brien, Darrell Martin, Tom O'Brien. We appreciate you growling and prowling with us out here. Right now, you got the Dow off $146, Nasdaq's down 29, S&Ps are off 19, and we're going to go over and take a look at the GDX for a couple tigers out here. So the GDX, folks, right now still doesn't have enough juice. You're up, you get 20 million shares traded. You're going into 102. Bottom line is that you want more action inside of that. And what happens inside the GDX, and this is where, there's a different ball game that's going on. You have Barrick. Well, let's put it this way. You have a lot, the highest weighting structure is Goldcorp, okay? Then you get Newmont and you get Newcrest. Those three stocks themselves are some of the weakest gold stocks there are. And that is 20% of the market. It's 20%. Yeah. If you just you take a look at a couple strong stocks, an Eco Eagle. An Eco Eagle's blowing out at swing point. You got 1.5 million shares. And it's going to do it. It's an ABC up. It's going after the highs that were generated out here, 27.95. So this is a good setup. And Eco Eagle's saying, hey, it's going to have a shot to go to 34 bucks. If we go look at Wrangle Resources, Wrangle, 594,000. You're going into 2.1 million. You're going into 1.3. It's not bad. It needs more juice though, but it's not bad. FNV. Now a couple of the royalty stocks. Yeah, this is good. Okay, so you got Franco-Nevada up 251. That's going into 4 million. Yeah, that's going to need more too. But bottom line is that the last swing only had 800,000. You're doubling that. You're going up to 1.9 million. Let's go look at Royal, because what happens with those two royalty stocks, folks, is that they can give you a decent indication of where gold's going. Okay, now see Royal Gold. It's a problem. Different ballgame. There's some divergence. There's some heavy. Well, what that shows is that there's heavy divergence inside the gold market period. Yeah. You know what I mean? And I better get my head over to the NQs for a second, because this market's rallying, man.
They're moving on up, right off that one deviation.
Yeah, they certainly are, man. And it's
up to 41.71 right now. So.
Yep. We just went from 111 to 160. That's a move, man.
50 points.
50 points.
1.25%.
pretty intense.
1.25%
Just 50 points. It's like a little bitty chart right now.
Yeah.
We're barely creeping into that bar from this morning, which is crazy.
Yeah, I know. And if you know the so the S&Ps seem like they're a little bit weaker. Yeah, they are. So it's if you look at these 10-minute, what you have
biotechs that you pulled up are a big deal right now.
And in fact, thank you for saying that. And what happened, folks, is that at the last commercial break, I had said to Tommy, I says, "Oh man, I got to watch this because the biotechs are moving." And sure enough, in a heartbeat, they moved $6. You know, when we did that, they were at 302. And they're longer than that now. Now they're 311.
Yeah.
Those biotechs, man, and
volatility.
Oh man, in spades. There's no two ways about that. You talk about in spades, and you know, bottom line is that you stay right there because we got our man Mr. Basil Chapman coming up next. He's going to be growling around with you. Nico, Steve Rhodes, Dave White will be back here this afternoon. And don't forget, folks, you know, of course, Darrell got a great show every Wednesday, Thursday. Come visit us out in Las Vegas.
Download that Nadex platform and then come visit us when we're in Vegas.
Yeah, totally. You gotta love it, man, no doubt. And you know what? This volatility is going to continue. And if we go, actually, let's go take a look at the small caps. Those small caps, the small caps are still under the August 24th low. Have a great one, Darrell. Have a safe one.
Take care, man.
Thanks, Tom.
Thanks,
Tigers and Tigresses. You have a great one, safe one, and remember, keep that hand on the button, folks. Dow's down 131, Nasdaq's off 23, S&P's are down 17.5. Stay right there, man. Mr. Basil Chapman's coming up next, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.